Thinking about buying your first home? Here's the truth. Your journey starts a year before you ever get your keys. Today, we'll walk you through a 12-month game plan to make sure you're ready when that time comes. Welcome back, guys, to another episode of Closing the Deal. I am one of your hosts, Zach Dickson, and sitting across from me this morning is my co-host, Sam Enright. What is going on today, Sam? How are you?
What's going on, man? I'm doing pretty good this morning. How about yourself?
Oh, can't complain. Cannot complain. Another day, another week, another episode here.
Yeah. Yeah. I would reiterate what I've already said like on the last 17 episodes, that time just flies by, but I think people are probably just tired of hearing that at this point. They're probably like, get a grip, like this is life. So but yeah, just I'm truly mind boggled that again here we find ourselves in the middle of the week when it feels like it was Saturday, like a half
12
second
hours
ago. Yeah, legitimately. So but yeah, good week. And yeah, I've got it's been a great week for me, actually. We had this really troublesome loan file that we've been working on for the better part of about 45 days. And we finally got to wave goodbye to that, and we were able to get the clients to the closing table. And so hopefully, everybody seemed happy. And so definitely was a joyous occasion because that one was causing me a lot of stress, losing sleep over that one. So it's been a good week. Everything from there is just an icing on the cake,
Those are the best deals to get done, face a little bit of adversity and a little bit of why are we doing this and all of those things throughout the process, getting to that closing table, getting it done after all of those hiccups, adversities, et cetera, et cetera. Those are the ones that feel the best all in all. So I echo that sentiment for you for sure. I can understand why it would be a pretty good week, tackling some of those adversities and struggles that we face.
Yeah, for sure. I just had to, kind of remind myself like, hey, there's very rarely do we not get loans to the closing table, because I felt like on numerous occasions in the last 3 weeks, I'm like, there's no way this loan gets to the closing table. Like, there's just no way this is getting done. Like, we screwed up. Like, this is bad. This is, we had like a perfect storm of just all kinds of different things going on. And I just had to try to remain positive. I mean, you saw me. We had the one morning that we were actually out on the golf course, and I was just a ball of anxiety that morning just thinking about that deal. So it's definitely feels like a weight lifted off the shoulders. So, and I'm glad that they were able to get in their house and all worked out in the end. So I think that's actually what you kind of reminded me of in the moment, was that it's all going to work out in the end. But I was unwilling to put that to the side at that moment in time.
It's hard to do so in the moment for sure.
Yeah.
It's easy to say in practice, obviously, but executing on that with actual actions and reaffirming, thoughts and actions as a whole, those are the things that we actually have to do and physically do. We can talk all we want, but just got to physically go do it. So.
Yep. Certainly not easy. Simple, but not easy, right?
No doubt. So I teased it on our cold open a little bit here. What episode do we have planned for the listeners today?
Yeah, guys, we're actually talking about kind of a game plan or roadmap, if you will, outlining, what you should be doing 12 months before purchasing your home. This is something that, and we can obviously share, both sides, because we've seen both sides. We have clients who legitimately look on realtor.com in one day and all of a sudden are applying and wanting to go put an offer in on a house within 24 hours of all of the same events going on. Then we also have clients who are far more methodical and, they reach out and they say, hey, we're not looking for the next 6 to 12 months. We're just looking to get a game plan together, of how we need to go about this. And so I just who I am as a person. I'm somebody who believes more so in the planning process, who believes a little bit more in kind of setting out on a roadmap and putting a game plan together and kind of following step A to EF, whatever you want to call it, you know what I mean? And some people are a little bit more spontaneous in life. Some people, just like I said, just pull up one day, they see a house they like on realtor.com. Next thing you know, they're talking to a lender and they're putting an offer in all in the same 24 hours. And so that's all great and dandy, but a lot of people, let's be honest. I mean, no, not most people can just get up off their couch and go put in an offer on a house. There's a lot of different factors that go into it when it comes to finances, credit, savings, all of these things that go into purchasing a home, right? That, in my opinion, is a little bit more of a bigger decision than just something you make on a whim. And so, trying to create a roadmap and an idea of what that looks like for you guys and how to best prepare for that is ultimately the goal of this episode in outlining those things.
For sure, could not have said it better myself. So to get us started in honor of the home building process, how we get started, building the house is getting that foundation started, right? Making sure, and obviously this is going to get to the very beginning of the timeline, the 12 months out, 1 year out to 9 months out, and so that's the time period where we're going to want to lay the foundation for this, home search as a whole, and make sure that we have all of our ducks in a row, all of our T's crossed, our I's dotted, all of the things that we need to do are taken care of prior to, getting started, getting pre-approved, all of those things. So the number one thing that I would recommend is going to be checking out your credit reports, and making sure that all of those things look correct. So obviously, a lot of people do use Credit Karma and things of that nature, things like that. Those apps out there, those are good apps for very ease of use. They're gonna give you most of the information, all of the your debt accounts, your collections, et cetera, et cetera. All of those things are going to be pretty easily accessible on one of those apps. So definitely go check that out. Make sure that everything is correct on there. Errors do happen with credit reports. Unfortunately, sometimes things happened that you don't even know about. You got sent to collections for an old, AEP account, electric account, or old utility account as a whole. You didn't even realize that you had a final bill to pay, and now that is sitting on your collections, and unfortunately is bringing your score down as a whole. And so a lot of those things that are going to pop up on there that you may not know about are going to be easy fixes. And so if you're looking at it 12 months before the fact, and you're able to see that, you're able to get it taken care of pretty easily and get back on the right track, and get that, credit score back to where you want it to. So always recommend, obviously checking out that credit report and making sure everything's correct on there, making sure there's no errors, and then obviously getting anything outstanding taken care of that you need to as well. Another recommendation that I would always make, and I'm sure Sam would echo this sentiment as well, is, start paying down high interest debt. This would include, credit cards specifically, or personal loans. Some of those credit card rates nowadays are astronomical. And so your minimum payment may not be what you actually think it is. Unfortunately, when that, high interest, high balance debt is up there. And so that can obviously eat into your ratios as a whole, your debt to income ratios, and obviously not allow you to purchase the type of home that you're looking for or that you would like to as a whole. And so then the last thing I would say, just recommendation wise, would be to, track your expenses and create a savings plan as a whole. A lot of people, I think, put together maybe a budget to begin the year, and, 3, 4, 5 months into the year, it may get kind of thrown to the wayside sometimes. But sticking or creating a budget and sticking to it and having a savings goal within that budget is a fantastic tool to get you started on the right foot on this home journey, and this home search as a whole. Obviously down payments are large payments. Obviously closing costs are large numbers. So being able to, 12 months beforehand, determine that number that you need and kind of lay out a roadmap, a groundwork, a framework as a whole to determine how we can get to, like you mentioned, point F, point G, whatever it may be, to be able to, get that home search started. So those are definitely 3 of my recommendations as a whole. And that would be, my biggest takeaway, and how to get started 12 months before the fact.
Yeah, for sure. And to kind of reiterate a couple of things there, I mean, the credit report, that would be, in my personal opinion, the very, very most important thing that you can do. And I would actually take it a step further because I know for a fact that Credit Karma, where a lot of people get into trouble is that they don't realize there's 38 different credit scoring models out there as current. So while Credit Karma may be using one credit scoring model, that is not the typical credit scoring model that mortgage companies use. We typically use a like a classic FICO model, and I'm pretty sure that Credit Karma is on one of the Vantage scores. So you're talking about two very different algorithms that read credit, and so they're not going to report the information all the same way. Which is exactly why when most people come to us, they say, "Hey, my Credit Karma scores 620," and then we pull their credits 550, and they're like, "Oh my gosh, you guys pull my credit and now it's tanked," or whatever the case may be. That's not necessarily how it goes. You're looking at two separate types of credit scoring algorithms, and so they weigh things differently. My suggestion would be to look at actually paying for a credit report, because the free reports, while great to monitor things, are not always going to, like, I know for a fact Credit Karma is not good about reporting any sort of collections. I know that I've had a medical collection on my credit specifically, and I've never seen it on my Credit Karma report once, like, at all. But I get calls all the freaking time about a collection agency calling me. So I know that it's there, and it's one of those things where it's like it's not going to show up on the report. So in my personal opinion, one of your pay for that. There's an annualcreditreport.com that will allow you to pull one report a year. You can go to myfico.com that will allow you to pay to pull a score, or to pay to pull your scores. I think, in my opinion, that it's worth a little bit of money up front to go ahead and pay for that, to get an accurate idea. If that's not what you're going to do, obviously reach out to a lender. When we do a credit pull for people, that's something that we'll do at the initial application that submit to us. We'll take a look at what that is, and then we can kind of go over everything together from there and say, hey, this is where we're at, this is what we need to do, because it's not just about errors and those sort of things. If you're somebody who's made mistakes, if you're somebody who has late payments on credit, if you're somebody who has high credit balances and you don't necessarily know how to go about fixing credit, I know that we've put out some content on that. We've put out a credit episode. We've talked about those sort of things. Obviously, go back and listen to that, because I think that there's great value there. However, if that's something that you want some help with, you can always reach out to a credit professional. You can always reach out to a mortgage professional. Obviously, yes, we are not licensed, credit repair specialists, but we have seen lots and lots of credit reports and do know what makes credit tick. So that would be, in my opinion, the biggest one. And then obviously the savings, I think, is another huge one, just because obviously, purchasing a home is not a cheap occasion, and putting that on the back burner until you get closer and closer to that date is ultimately not going to set you up for success. It's going to set you up for actually quite the opposite of success, in my opinion. And the savings plan, doing those things, like, that is ultimately the most important. So you can't fix what you don't track. Getting an idea of your game plan 12 months out is going to set you up for success and clarity throughout the journey.
Yeah, I agree with you 100% on that. I actually had just a personal example of that as well. My Credit Karma score was a certain number, and then I had my credit pulled the other day, and it was about 80 points lower than what the Karma number said. So had me a little bit confused, and but got it all taken care of for sure. So
Yeah, I mean, ultimately, that's a pretty common thing that we see people go through, with the Credit Karma. So that would be, again, why it's such a important thing on my end to pay for the credit report. I know it's probably not ideal. A lot of people don't do it very often, but it's ultimately going to shine the light on a lot more things than just going off Credit Karma or experience. So yeah. But guys, getting into kind of that next timeline, right? So we've talked about 9 to 12 months out. What should you start doing when it comes to 6 to 9 months out? Well, I think first and foremost, we're going to look at, increasing savings. So obviously, if we've started that foundation, if we've built an idea of, okay, hey, this is where we need to be, this is going to put us on the right track. Now it's time to start really probably pulling in more funds and really focusing on that. When we start to get to that 6 month mark, you guys have heard us. I mean, I just talked about it this morning, right? first thing I said, I can't believe we're already at another Wednesday. And yet that is the cycle of even just anything in life. And so, you guys may think that, hey, we're only 6 months out or we're 9 months out, but you guys, that's going to be gone in the blink of an eye. And you don't want to get caught behind, right? You don't want to get to month 3, you find something, or, months 0 to 3, you find something on the market, and all of a sudden, just like that, it's, you're ready to put in an offer, yet you're not fully prepared. So I think, increasing the savings plan, definitely starting to come up with an emergency fund as well as your down payment fund, having additional funds. This is something we talked about, I think, even on the last episode, is we never would suggest blowing everything that you have in savings on a house, because obviously there's things that can go wrong. We know that, whether it's even with the house, whether it's just with your vehicles, with anything in life, we can come up there. Things can jump up on us and become surprises, and you never want to be caught in a position where you don't have the means to take care of yourself. And so, that's why it's very important to kind of start to focus in on that, right? Inside of that, as well as to avoid big purchases. Ultimately, at this point in time, everything that you do with your credit, everything that you do is going to impact your debt to income ratio. So if you're starting to, take out big purchases, if you want to go buy a new car, or you want to go throw, new furniture, or, things on your credit, new TVs, whatever it may be, you have to go into all of that with the understanding that this has a potential to affect your debt to income ratio if you're not going to take care of these debts before you buy the house, right? So, I mean, obviously with a new car, you're likely not going out purchasing a new car with hopes of paying it off in the next 6 months. That's not reality, right? Most people are opening a car loan, and they're going to, hold on to that car for the next, or hold on to that loan for at least the next 3 to 6 years, right? Just depending on the term that you sign yourself up for. So those are the things that we're looking to avoid, because you want to be in the best position possible when it comes to purchasing your home. You don't want to have these things of large loans, large credit lines bogging down your debt to income ratio. I also think this is a perfect time, if you did not already in the 9 to 12 months, is to start researching your different loan types. Personally, I would reach out to a lender for this. A lot of times we talk with clients who are, they do their own research. The biggest thing I always hear is, hey, what first time home buyer loan program do you have? I always have to explain to people there's no such thing as a first time home buyer loan program. You have your 4 traditional loan types, and yes, there are some benefits to being a first time home buyer under the criteria of those loan types. There are different grants and down payment assistance programs out there that do cater to a first-time home buyer, but there is no true just I'm a first-time home buyer, here is the loan program that you're going to go with. That's not it's not something that exists, right? So again, so I do believe doing your own research, while valuable and important, I do believe, starting to get a conversation with a lender out there, and kind of getting the ins and outs of all of that and what that looks like is very important. So, those would be my kind of big takeaways of that 6 to 9 month range, and what we should be looking to do to set ourselves up for success. Zach, I mean, is there anything, in that sort of timeline that you think should be added, or um, I guess you think would also be valuable?
Yeah, I mean, ultimately, I think that you hit the nail on the head with the savings specifically. That's going to be my biggest, proponent at this time period is save, save, save. I would say that that's the trap that most first time buyers fall into. They start saving late, at 6 to 9 months out. Your job is to make sure that you have as much cash on hand as possible and avoid big purchases, like you mentioned. Don't buy your new car. Don't open the new store credit card. As you mentioned, debt to income ratios, every dollar will count. So ultimately, this is the time to, hunker down, start saving, cut back a little bit, be a little bit more frugal, and, put that roadmap together on how you want to get to the very end point, of purchasing that home.
Yeah. Yep, absolutely. That is the key for sure. So, guys, and then I mean, obviously, getting into kind of the as we segue right into the next section of time, we're looking at, what 3 to 6 months, where do we go from there? In that 3 to 6 month period, this is probably a great time for you to finalize or at least get an idea of a pre-approval from your lender. Obviously, if this is, hopefully in this time period, you have decided that now you are no longer going to, be financing things. You're no longer going to be opening new lines of credit. If you did that in the 6 to 12 month period, because let's just be honest, that's probably not reality for most people. You're probably still going to be using your credit cards. You're likely still going to be opening new trade lines. We hope that you would not be, but this is reality that we're dealing with here. So I would hope that at this point in time, you have now started to kind of lock that in. And here's the biggest thing. And I do want to kind of say this just based on, kind of my, just previous experience with the loan we just talked about, right? That we just got to the closing table. When you do get a pre-approval letter, please, please, please do not make any financial moves on your credit at that point in time once you have locked that in, especially if you are actively out looking for homes, guys. This is so vitally important. The loan that we just closed, this couple had opened a new personal loan. They had exchanged 2 cars in and gotten a new car loan. They had moved credit card money around. So there had been a lot of activity during their pre-approval process. Their credit had been locked in from this point in time. They had made these moves while being pre-approved, while still out looking for homes. These are things that we had to combat and move around. We had to work around the fact that there's new debt being open. We had to work around the fact that, and this requires documentation across the board. This is not just as simple as, okay, hey, this is what was done. No, we legitimately have to document, okay, both car loans were closed and now a new one's open. Great. You have to provide proof that all of those things have just happened. That means documentation from the car dealership. That means showing that each loan was paid off. That means showing that you traded the cars in, whatever the case may be. You have to show documentation showing any new trade lines were open. Like, this is all going to eventually come back on you and just create more work. So in my personal opinion, if this is something that you are serious about, if you want to purchase a home, once you reach this point in time and your credit has been pulled and you have a formal pre-approval letter, just stop. It's one thing to put, $100 in gas, in 3 weeks on a credit card and pay it off. That's not what we're talking about here. We're talking about making major money moves when it comes to your credit in the middle of you being pre-approved, because anything that you do is going to affect what you have going on. So I'm sorry to kind of get away from months 3 to 6 and talk about that, but that's just something that's very fresh on my brain. And it's something that I think a lot of people don't think about, because when we tell them, hey, your credit's locked in for 120 days, I think to them that means, well, whatever it was at that day, we're good with. That's not the way it works. If you're over a certain debt to income ratio, we are going to do another soft pull on your credit to ensure that you have opened no new trade lines and things of that nature. So, always talk with your lender. If these are things you're considering, if you have to, I had another client, right, that they had their car totaled while we were in the middle of their loan transaction. First thing they did, call me. Sam, what can I do? This is the situation that I'm in. How do I best go about this? We talked about the options, and guess what? They went with the option that was going to least affect their loan side, but they knew that it would least affect it because they called and they had that conversation. A lot of people just kind of just go do things arbitrarily and don't really think about the repercussions at the end of it. And that's cool. But again, if you're in the middle of a loan process, you cannot come back and be mad at your lender when things are not going the way that you want them to, because you made decisions without consulting with them or having that conversation. So, sorry for the tangent, but that is something that I would highly, highly suggest. So after your pre-approval, I would say start organizing your documentation. That way you are ready to go. There's 4 key sets of documents that any lender is always going to ask for, and that's always going to be your W-2s for the last 2 years. So make sure that you keep track of these. A lot of people will file their taxes and then somehow their W-2s go missing into thin air. So, keep your W-2s around. That's always going to be important. Anytime you go apply for a loan, a mortgage, your lender is always going to require your last 2 years W-2s. So making sure that you have those is always going to be key. Pay stubs. This is something that for a lot of people, especially in today's day, is likely going to be a very easy thing to come up with because most companies use electronic pay, pay sites at this point, like your ADPs, your Paylocities, whatever. And it's very instantaneous access. You can just go in and download a pay stub. But again, just something to, have that plan in place, understand where you can get those, how easily it is, how easily it would be to find them. Bank statements. This is something that people obviously struggle a lot with. I don't know why. A lot of banks out here make things very difficult. I have seen it, so I can't say that it's on the clients. Some banks actually charge for bank statements. As crazy as that is to sound, they legitimately charge you to get copies of your bank statements. I know it's nothing astronomical. It's a couple cents a page or whatever, but it's just wild. If you have like a Huntington, a Park National, a Chase, obviously these things are readily available. I can legitimately log into my Huntington app right now and send bank statements anywhere that I want to. So it is obviously just, kind of important to locate those to see how easily they would be accessible. If you have a bigger end bank, they're going to likely be very easy to get. If you're a smaller, more mom and pop type bank, probably worth it to call them and figure out, hey, how am I going to get access to these bank statements, that sort of thing. And then any sort of like major financial documents, these, things like if you've had a bankruptcy in the last 7 years, having your bankruptcy and discharge paperwork readily available, very, very important. If you, earn some sort of like income that is non W-2 base, if you're somebody who earns social security income, if you earn pension income, if you earn child support income, any of these things, having that documentation readily available to, be able to send to your lender, like having all of that and all in, having all of those ducks in a row is going to make the process much, much smoother. Because I know that we've talked about this in previous episodes. The fastest loans that get closed are the ones that have the clients who cooperate the most and get the documentation the quickest. So, and then Zach, what would be some other things in that kind of non-financial side of things, but in that 3 to 6 months range from maybe a real estate perspective that people should look into?
Yeah, for sure. Now that we have that pre-approval letter in our hand and we have kind of, a gauge on what we can afford and what our price ranges are based on, our monthly payment and our purchase price as a whole, now we can start, kind of looking around into specific areas, specific properties, specific neighborhoods, on what we are looking for and kind of determine our buy boxes as a whole. We've talked about this multiple times in our episodes previously, but ultimately you have to determine your wants versus your needs in this home search. And obviously the needs are going to come, at, the needs are going to have to be there and the wants are not going to have to be there. You might have to sacrifice on the wants a little bit. And that is kind of what we're going to do in this time period. Is figure out exactly what we're looking for, put together those buy boxes and get you on that MLS search. And so now all the properties that are coming on the market within those buy boxes are now coming to your email each morning. And it's super easy to get scheduled for showing, super easy to go check the property out if it has an open house, super easy to kind of conduct business at that point once we have that pre-approval letter in our hand. But kind of backtracking a little bit, obviously, to get that those neighborhoods, those buy boxes set up, the price range, all of those things, we probably want to be talking with, or finding a trusted realtor within those neighborhoods, within those properties, within that, that demographic of what you are looking for. Most realtors are going to have niches. Some people are going to be in this area specific, or they're going to be dealing with multifamily property specific, or, whatever it may be, et cetera, et cetera. And so at that point, I think it's a great time once you have that, purchase price in hand and you can start to determine where you want to be at. That's when you can start, starting to interview your real estate agents and find a trusted one, one that you enjoy working with, because again, you are going to be dealing with this person a good amount throughout the process, obviously, from checking out showings to crafting offers. All of those things are going to be in the hands of the real estate agent. And so this is definitely the perfect time to, find that trusted one, in addition to, finding the areas in which you want to live, the properties in which you want to live, all of the above. Now that you have, a semi-concrete purchase price pre-approval number that you can kind of, base off of at that point, given you don't make any changes to your credit, to your income, as we spoke about before.
Oh yeah. Yeah, for sure. I think that Um, no, I mean, obviously, great advice. I think that's, kind of, especially in today's market, right? Because, things are not, I guess, as they were, a few years ago. And, we had one client in particular that took, well, I mean, she was on the house hunt for over a year and a half until she
18
found,
months.
I mean,
Yeah, I think in
yeah, I mean,
total.
she put some offers out there and that sort of thing, but truly before she found what she was looking for and wanted to go with, it had taken a while. So I think the sooner the better. That's something I've thought about myself as well. I think it's ultimately, you're never going to hurt yourself, right, by jumping in ahead of that. So especially with today's market, when there's a little bit less, inventory out there, and it's going to take you a little bit longer. And I feel like people's needs and wants have kind of gone up. I mean, a lot of people in today's world, I think, either because, I mean, depending on the area that you live in, where you live, where I live at, if you rent up there, you've now grown accustomed to like these very, I guess, I don't know if I would say high end, but they are a nicer, nicer sort of apartments, right? They've put in the new appliances and the new countertops, and they're very light, they're very new, they're very modern. And so, a lot of people, are searching for that when they go buy a house, right? They don't just want to just completely go the opposite direction where you have a house that was everything in the kitchen and everything was built in the, hasn't been redone since the 80s or 90s, and now you're in something completely out of date. It's like completely different. And so if you're somebody who wants something that's newer, nicer, been renovated, that sort of thing, it's going to take you a little bit longer because those properties are of a higher priority for people, right? You're going to have more offers, you're going to have higher competition. And so starting the search a lot earlier is going to allow you more opportunities than just expecting to jump right in the gate, find something, and just put an offer and just get accepted. And all of a sudden you're in a new house moving, right? So I think that that's really important as well. And then kind of the last, portion of time here, obviously, is your last 0 to 3 months before you actually purchase. What does that look like? At this point, obviously, because you've already done your pre-approval, because you've already started your home search, things are going to be a little bit different. But, now's the time to, I guess, maybe take a look and see if things have changed. Have you made any decisions with, with your finances? Have things happened in your life that you've had to make changes, where you've had to either open new credit cards, or maybe you've had to spend some of the savings that you had set back, right? You had an emergency, you had something that popped up that you needed to spend the money. Well, let's reassess the financials and make sure that we're still putting you in the best position that you need to be in, right? That way, again, following back up on our previous episode, that way you're not becoming house poor. That way you are not putting yourself in a position where all you can do is make your house payment. And then I think this is, where we would lock in, your loan program, lock in your pre-approval, make sure that, again, we have you in the perfectly right thing for you that makes the most sense, that's going to be of the best, put you in the best situation, right? For what it is that you need. And there's going to be changes along the road. There's going to be things that update. At this point, you've probably seen some houses and maybe it's been like, hey, whoa, our budget's not going to get us where we need to be. How can we best, reassess the situation to get to ourselves to that higher budget, and get ourselves where we need to be so that we can put offers in on the houses that we really want. And so that's obviously where we kind of lock in everything and really set you out on the path to getting what you need.
Yeah, I couldn't agree more. It's really go time at this point. Execution mode, all in all. It's just, we laid out the plan, the preparation, and now, this last 3 months, it's time to execute on the plan and make it all happen at that point. From my standpoint, from the real estate agent, I would say that in this time frame, the biggest thing that we're going to do is kind of construct a general offer strategy. We're going to talk about the things that you absolutely need, whether that's, possession through 2 months from now, or possession through 3 months from now, or your lease ends in 3 months and you kind of have to line up those dates with that. Or you have a lot of cash on hand and you can, maybe offer an appraisal gap, or whatever the, extras there are that we've talked about in our previous, how to make an offer episode. Those are the things that we're going to determine at this point to, kind of, have all of our ducks in a row, have our plan ready to go. So when we do find that property we're ready to offer on, we can have a clear cut strategy, based on all of the factors that go into the offer, that, obviously are beneficial for you, but also are beneficial for the seller as well. Some things that you may be able to, or may be willing to negotiate on, to make the seller happy with the offer that you're presenting as well. So that's what we're going to be doing on the real estate side of things. Before we ever make an offer, we're going to talk about, the process of the offer, and, some of the things that we can construct in there to, make it a win-win for both parties all in all. So
Yeah, for sure. Absolutely. Well, guys, I mean, that's the 12-month plan right there. I mean, that's going to give you a great idea of how to kind of attack this process, how we would recommend attacking this process. I know some of you guys are, gonna wait last minute and procrastinate, and that's all right too. We're here to help those people as well. So, but I don't think there's anything wrong with either way. I mean, if that's the type of person you are, a non-planner, just kind of likes to fly by the seat of your pants. I respect it. I'm a little bit more of a planner myself personally, so I think obviously putting together a plan is ultra beneficial. But if you have kind of the main things taken care of, you can kind of get away with it a little bit more, right? If you have great credit, if you have a good amount of savings kind of saved up, and you're just kind of waiting for that moment in time when you find something you really like, you want to put an offer, this is a little bit more for people that need to get some things sorted out, right? That need to make sure that everything's kind of in a row, and maybe haven't prepared for this before. They haven't looked at the credit, they haven't done any of those things. But all in all, man, buying is a marathon, right? It's not a sprint. This is not something that, is taken lightly. It's something that is a huge decision. And I don't think most people just come to it overnight. I think it takes them time. And so, preparing yourself for such a large purchase is always going to be, a beneficial thing. So just looking at all of the different things, and, leaning on your professionals, leaning on the people that you have in your corner to help you is going to be, you know, very, very beneficial. And obviously, if you find something that you really like and you haven't been prepared, right, I always feel for the people that maybe have credit issues, right, and they have known in the back of their head, low key, that they've had some credit issues, and they've said, we'll just put it off. And then they find this property and they love it, right, and then they come to us and they say, hey, we want to go put this offer in. And it's like, guys, you have this going on with your credit, you have this, like, now they're scrambling, trying to figure it all out last minute, right before the property gets scooped up, and there's too many offers, and then they can't find it. And it's I always feel for those people, right? Because if you had just looked at it 12 months ahead of time, you would have given yourself plenty of time to fix whatever it was that's going on in the credit without feeling rushed, and without trying a super super hard route to go. It would be a lot easier. So I think now's the time, right? So if you're thinking about buying in the next year, reach out now. We can help build you a 12-month roadmap, help get you a personalized map for yourself, and you guys can kind of take it from there, and continue to work on that and build that. And 12 months from now, I know it sounds like a long time, right? But we talk about it all the time, like, time's going to fly by. We're already in the back half of 2025. Like, before you guys know, we're going to be in 2026. And so if buying a house is something that has been on your radar, it's something you want to do, don't get discouraged. Reach out and reach out to one of us, and we can help kind of build that game plan for you guys.
Absolutely couldn't agree more. Obviously, like you mentioned, it's a marathon. I think, generally speaking, in my opinion, it's a lot easier to, on a whim, like a one-off event. A good example would be like maybe an exam or a test. Like, you have one test and you didn't prepare for it. It probably is a little bit easier to come out of that one event with success. But when you have a marathon, that's going to last for 6 to 12 months, if you're trying to do all of that on a whim, it probably isn't going to work out. You got to have some sort of prep work to be done for sure. So couldn't agree more on that. Obviously, the battle is won before the first shot is ever fired. Honestly, you gotta prepare, gotta be ready to go when that opportunity comes knocking as a whole. So I think it ultimately means significantly more here in real estate, and especially in our market that we've seen over the last couple of years as well.
Yeah. Yep. 100%. I feel like the people who usually end up successful are the people that have put a game plan together and, executed on that game plan, right? We see far more clients have success going that route than clients who just randomly pop up on a Friday and want to go see a house on Saturday and put an offer in. Like those ones are usually like, again, there is prep work in there. If you're getting that done right, you've been somebody who's taking care of your finances, and maybe yes, you were not necessarily building it towards actually buying a house, but you've got 20, 30, 40,000 saved up and you have great credit. Yeah, are you going to be successful in that situation? There's a chance for sure, but that's, again, that there was still some prep work done in there for that. You know what I mean? So you obviously took care of your credit and saved up your finances. So you obviously were preparing yourself for the opportunity. But yeah, you're going to be far more successful going that route. So I would highly suggest anybody out there to, if that's been on your radar, definitely start taking it serious and put together that game plan and, obviously then execute the game plan. Because one thing to just put it together, it's another thing to obviously follow it.
Couldn't agree more, brother. Well, definitely a great episode today. I think there's a lot of value in there for the listeners. Hopefully they enjoyed it, and you definitely will. Obviously, we'll be seeing you guys on the next one, which will be next week. It will be here before we know it. We know that for sure.
Absolutely. Yep. We'll put live odds out there of the chances that I say, guys, it's already Wednesday again next week. So I'd put it at like minus 500 probably that I say
I'm
that
taking
again.
that bet. I'm laying the juice.
All right,
well,
guys. Well, go ahead.
Well,
Send us
guys,
out.
hopefully you guys enjoy the rest of your day and found some value here, and we will see you guys on the next one.
See you guys.